Dana, welcome back to Face. You know what I'm gonna start with, right?
I never know what you're going to start with, Dale.
All right,
It could be
okay. So,
anything.
All right,
All
all
right, I
right,
gotta
Dana.
How
get
I
you
it.
thought you
doing,
were ready.
buddy?
All right, thanks, Mike.
Welcome,
Anyway,
Dana. Welcome.
Thank you, guys.
so Dana,
How you doing, buddy?
you were long Japan near the top of the yen. I want to know how you handled Japan and what you're doing with it now.
No, I still like Japan a lot in the long term. That's more of a long term. So, I mean, we've been
You just rode all out all that vol, huh?
no, we sold it. So we've been long Japan for a number of years now. Where do I
Yeah,
how do I get rid of this thing? Okay. Um, we came into we've been testing the top, that
yeah,
1989, 90 top. So I would expect to consolidate here for a couple of years,
couple years.
maybe.
Yeah, yeah,
But we're still, we still got, I think, a lot of life left in this secular bull market. You got to remember how long the bear market was.
yeah. From
People
'89 to
suffered for, several decades. So you can expect several decades of a bull run. But after this run, it's not unusual for us to move sideways for several years. We had a really good run, but especially had a great run in the hedged equity
right.
portion of that or version of that. So DXJ was just a monster for us for several years. In that July sell-off, it kind of traded like the large cap techs, right? Kind of led the
Yeah,
way down. So we got
yeah.
rid of our DXJ into this bounce,
Oh,
into
nice.
that it's kind of ABC correction. So into that B wave. Got rid of the rest of our hedged Japan. We still have some unhedged Japan because it looks better. I know you guys are big currency guys. I am not, but one message I'm seeing currency wise is um, maybe we're going to continue to see some dollar weakness because the hedged equities are still lagging here. You see hedged Japan
Right.
looking worse than the unhedged version.
So,
The
yeah.
equities
So
and
yen is bottomed, and this is just a maybe a failing rally
uh,
or a pullback.
that could be the message that we're seeing. Yeah.
Okay.
Especially you look at Europe. The European indices back at all-time highs. You look at the hedged Europe average, which hedges away the currency, and that's lagging significantly. So
Yeah.
maybe the international currencies are going to be stronger here for a bit. The dollar continues weaker after this whatever bounce it's on right now. So
Yeah.
just from
Okay.
a currency perspective, I think that's interesting. So.
I'm thinking 106 Dixie, Dana,
Are you?
and then a failure. Yeah,
Okay.
because his first wave from par to over 103 was impulsive. It wasn't like a zigzag up to resistance. So
Right.
I think I'm looking for a pullback under 102 and
And
then a
then
push
about
back and then a push up to 106.
would surprise me. We'd be
Yeah.
again, I'm not that's not my
Oh, I'm
core
just saying
market, but
what I think for the dollar.
yeah, no, I agree. Benefit of doubt is still lower for the dollar, I think.
Okay. All
So
right.
we'd be sellers of rallies.
Yeah.
And probably asking me about bonds next. So
No,
we
you know what I wanted to go.
where
Were you in China before the explosion?
we
And
were
then the give back, and so you consider it a good trading vehicle, investable.
China.
Yeah,
Oh, well, I like volatility for sure.
yeah, right.
We weren't in mainland China. That's still a little crazy. You look at, I mean, that's not an organic move. That's,
Yeah,
interventionist type of a move, which you can't be too confident. And it did break, obviously, that downward momentum. So maybe you can try your attempt
yeah,
at buying the pullback. But we've been long part of China just through. conventional emerging markets like this ETF IEMG has been making higher highs, higher lows for a while. Ran up into that 61 retracement and is pulling back from that. So took some profits there, but still like some of these more conventional emerging markets ETFs, which again, higher highs, higher lows, which we like. Could pull
Yeah.
back. If we pull back to that breakout point, we'll add back some good size into that. But still like
Yeah,
I
that
think
looks
that's
like
a
a breakaway gap to me.
yeah, that and
It
that's
could
a
be.
I think it's a more reasonable way to play that
Yeah,
move instead of
the other one, data. I heard that the shorts were squeezed on Shanghai and in Hong Kong so hard that
yeah,
their eyeballs were popping out.
100%. 100%. So
Wow.
I like moves. I like plays like that for China and other, other emerging markets. India's been great for a while. Here's a small cap. India has been a monster for us. Lower highs right now. I don't know if it's gotten too popular, but we're still riding that. Other less on the radar markets like Indonesia. Here's the cash market. Indonesia had a great breakout pulling back here towards the test of that breakout level.
Yeah.
Looks great to us. Argentina, I know it's not in Asia, so
Right. But
don't
you're seeing a
don't
lot of
mock me for that. That's been great. Just
yeah.
held that breakout level the other day and bouncing off that. So seen plenty of moves internationally, and a lot of that plays into
A weaker dollar.
oh yeah, a continued weakness in the dollar. So
So
again,
if we had the kind of dollar rally that I'm talking about, this that would set up great buying opportunities across the board. Because after
definitely,
that bounce, I think Dixie's going to 95.
definitely, it would definitely be I think
That
allow for
was
good entry
lighted up.
points. Yep.
Yeah, better than the U.S.
Yeah, I think US so our models, which are based a lot of the input comes again from the internals, breadth, advanced decline, stuff like that. It's still solid. Our stuff is still long. In fact, in the third quarter correction, never did give a sell signal because the broader
Yeah,
market stayed kind of firm. This is the value line geometric. It tracks the median stock in the market, still going sideways, hasn't broken out. If you look at its brother, the arithmetic, this tracks the average stock. So average
yeah.
stock did break out. It's trading kind of moving along at the top of the range, near all-time highs. So still looks good, still looks firm. Our stuff is still firm. Um,
What about the argument that compared to the July high, the number of new highs has been shrinking?
that's a little bit of a concern. You also have And I would say, as far as new highs, new lows are
Yeah,
concerned, you could have a significant lag time in between the divergent high and the ultimate high. So
years.
yes, it can be years or a year.
Okay.
I'm less concerned about that. If you look at the AD line, has been hitting new highs, but not
Yeah,
in this recent bump up. So maybe
yeah,
we see um, maybe a short-term blip here. I
yeah.
am concerned
5%
about
pullback.
seasonality right
Yeah,
now. We're
October.
still in yeah, October
Yeah,
pre-election. It all conspires to maybe again, our stuff is still bullish. Market action has been obviously pretty good.
yeah, it has.
Not overly concerned, but I don't like the seasonality for the next month, and sentiment has gotten a little bit ahead of itself in the short term. So you never know what happens in the lead up to the election. So I'd be
Do you
ready
have
for
any?
anything.
Yeah, always. And do you have anything above 6,000 that's going to tell you that things are really frothy, or you just have to wait till we get there to know what the market conditions are? Do you have a technical target to the upside of
Uh,
going into next year or the end of the year?
I don't like to play
Targets.
targets
Okay.
necessarily.
All right.
That 161 extension from the
Yeah.
2022 um,
A little over
bear market
six.
was really helpful in the S&P and the Nasdaq
Yeah,
100. In you look at but that was a temporary thing. That was like a profit taking thing. It wasn't uh, uh,
a
jump out of
rotation thing.
stocks, full board. No. But you look at something like SMH, also the semiconductor
Yeah,
ETF, right up to that 261, and that was the top. So maybe a signal there.
yeah,
I use that
interesting.
more for profit taking areas, not in sell signals, unless our
Okay.
stuff turns negative as well, which it has not yet. But good opportunity to rotate out of some of those former leaders and now look for new leadership.
Yeah, because I mean the S&P compared to the July high has exceeded it by a
Yep.
long shot,
Yep.
and Nasdaq hasn't, you know, taken it out yet.
No, so
The leadership is different.
yeah, leadership is definitely different. This one again, right up to that 161, a good spot to take profits. Then when you get the reversal, then you can make some adjustments. But we've had plenty of, and this speaks to the firmness in our models, the fact that we've had plenty of sectors rotating to take the place of the leadership, the industrials, a lot of the
Yeah,
defensive names, which went on a great run. Healthcare, utilities, went to new highs.
yeah.
Uh,
Okay, so
REITs went
utilities
to new 52-week highs.
are
Uh,
interest rate related stuff. So where are you on
Yeah,
TLT?
and value stuff went
Yeah.
to new highs. So
Okay.
that's in our view, and again, speaking to our models, that's a healthy market when you have a broad array of market segments and sectors hitting new highs. That
Yeah.
that puts a bit of a bid or a foundation under the market where you're less susceptible to just a top and an
A
automatic
shock.
reversal lower.
Yeah.
You've got a foundation under the market where it's going to actually take a bunch of cracks, a bunch of a process in order to turn the market lower. So I think we have that foundation, that safety net under the market right now, where I think we go higher eventually, have another move, maybe a blow off move before the ultimate top here.
Okay. 10 year we broke down
Then
from 420, hit the target, and now is this a rally to sell here and yields are going to drop again? And what's
That's
TLT
yeah,
about?
that's our view. We've been buying the last few days into this.
Okay.
We think you know the 10-year around that 390 level is our really line in the sand. So right now we're above it. We will buy up into this 415
Four.
or so on the 10-year.
Yeah.
We've been
Yeah.
buying up to like 440 right at the top in the 30-year. We think there is a chance for another move lower towards
Okay.
3.25 on the
All right.
10, maybe if we can, down
But
towards
if we close over 420, does that change the picture for you? Because that was the breakdown.
uh not necessarily. We'd certainly be less interested in buying it. But you can have overshoots. Trend is still lower as long as we're seeing lower lows, lower highs. Um, So we're still going to be bullish. Prices bearish on yields, but certainly if we did get higher highs, then we'd have to change our thesis. Right now, we're bullish on bonds still, but
Okay.
certainly pushing the envelope here.
Right.
So ultimately,
They have to
price will
dig in their heels.
dictate that. But yeah,
How
um,
about natural gas issues?
natural gas. I try to stay away from the widowmaker
Okay. Okay.
for
All right. And
I
anything in
among
energy?
what's that?
Anything in energy?
Yeah, nat gas always looks good until everyone knows it
You
looks
get hit.
good, and then it
Yeah.
pulls the rug on you. Crude oil, I think benefit Dow still to the downside. I
Yeah.
can't get too bullish on this chart
Okay.
right here. Is GSCI crude oil index. Plenty of resistance to work through, and we've had, you know, no shortage of bullish catalysts to get this thing moving higher to higher highs, and it hasn't happened yet. So I can't get too excited about crude oil here.
How about gold miners? Buy breaks?
Do like gold, the precious metals complex. We still do like quite a bit. We've got decent positions on in gold and silver. Obviously, gold hitting all-time highs. I wouldn't be chasing anything in that, but still buying pullbacks. Silver, I think, is getting set up for another run higher. We've been consolidating here for a couple quarters on SLV, break through 30. Be looking for up near 35 next. The miners I like too. Um, Obviously has been lagging the metals themselves a
Yeah.
bit as they have been for years, but like the action there. Junior silver miners, once we
SILV.
get through 13, make a push up towards 15. I think gold miners, have been hitting lower highs longer term, but just recently has had a nice year.
Yeah.
We've been looking for about 46 again, which was, the 2020 high, and
Yeah.
still that 61 retracement from 2011. So at least there, I don't know if we ultimately push through that and have a real rally like gold itself is doing, but still long these positions. I think they have a chance.
Do you think the market will be shaken at all since we probably won't know who the president is for a while?
Well, the market's going to do whatever it's going to do to shake out the most people,
Yeah.
That's what the market does. Whenever
Well,
it,
who's going to be more vulnerable into that situation? Obviously, the shorts or the longs. And let me ask you, yet someone proposed to me. You remember 2016 limit down S&Ps, right, Dana?
yeah, for
After
sure.
Trump won and Icon left the party and got richer. Um, if Trump wins, and I think that's what the market is hoping for, with tax policies, etc. I don't know. They're ignoring what tariffs could do. Um, could that be put in the high? Because we put in a low in 2016. We were like at 2,000 S&Ps back then.
Right.
So, maybe the market,
Kind of
or
a
at least,
reversal of
yeah,
yeah, the market. Yeah, you're right. I mean, the market, like I said, the market always does
yeah. So it'll be
whatever
buy the rumors.
to
So, yeah,
yeah,
sell.
whatever is going to damage the most people. So
Yeah,
maybe it would be a reversal of,
yeah.
2016, which, was kind of the impetus for
The
our
last,
new
yeah.
trading site that I launched in
Oh,
2017,
okay.
because we were hedged going into that, and if I had had a way to get to my subscribers then in the middle of the night about covering shorts like Carl Icahn was, that would have been a good vehicle. Now we have kind of a vehicle for that, because I
Oh,
saw
interesting.
no reason for limit down with the
Yeah,
results that were coming in.
yeah,
And again, not that I knew for sure that would be the low, but I saw the position people were positioned for that, and what the
it
move that was
even
going to
locked.
hurt the most people would be a reversal
Yeah,
and a move higher. So right
yeah.
now, I think it's
The other
kind
way.
of up in the air. I could see a move between now to November, a move to hurt the longs, which is kind of the pain trade right now.
Okay.
We've got a decent net long position on right now. We're not all in because I'm expecting some sort of a shakeout before that. Certainly some
Five
surprises
five
come along.
percent, 5%.
Sure. But
Yeah,
I for us, again, it goes back to our models, which are still positioned pretty firmly and still tells us there's more upside. So with that, we would use that right now as an opportunity to get more aggressively long. So
Okay.
look for opportunities, look for surprises here to get even in more long, looking for, another wave higher. Maybe that comes after the election, maybe it comes before, I'm not sure, but looking for
Right.
opportunities to get longer. Here's, I think, speaking to the leadership, we saw that the
Yeah,
growth
Russell.
area of the
It's
market
finally
kind of,
Russell. It's time.
yeah. Well, this is a 3,000 growth,
Yeah. Yeah.
ran up into that 161 extension again at the top in July. You're seeing a
That measures like 3,500.
Yeah, you're seeing here's the
Yeah.
Russell 3000 value though
Yeah.
really coming on, and I
Yeah.
think as relative to growth, I think it's time probably to see value go on a run, which it hasn't since, back at the highs and when it topped out
Well,
back in the 2006-7 peak. So it's been a long time coming. Another uh, kind of tell for us is the pure value indices, the small and mid cap pure value indices, which are really good risk on versus risk off tells for us. And the small caps have struggled, but you look at the small cap pure value, which is the biggest risk on tell. It's really consolidated for a year or even 2 years. If we get a breakout in this, you could see a real nice risk on rally before, the ultimate top. So I'd keep an eye on this one. RZV is the ticker symbol.
okay. There's a tell to write down and pay attention to, and don't short till we get there. And Dana, after people see this and hear this, best place for them to follow through with you as an RIA or get your letter. Want to show your website, buddy?
Yeah, certainly. So you can find me at the Lion's Share, lionsharepro.com. Mentioned this is the trading site that we started in 2017. Um, Basically, to give you a daily synopsis of what we're looking at as money managers, how we're actually moving our money as money managers for our managed clients. We'll give you trades every day, what we're moving yesterday, added to our 30-year long bond position. But we'll give you pre-market stuff, what we're looking at, and you pull the triggers yourself, but we tell you what we're actually looking at, what we're actually doing. But our core business is managing money. J Lions Fund Management is our RIA where we manage money. You can find us here, info@JLFMI. You can email me if you got questions. On Twitter, I still call it Twitter. J Lions Fund Management is the handle. So, yeah, you can find us here. Check us out. We'll have a crash sale every year in memory of the '87 crash.
Oh,
Um,
so here we go.
yeah,
You have a
26% off for the
and
loss
I
in the
want to thank
Dow.
you for also showing my former apartment on the
I
left.
know, Marina Towers, you mentioned that every.
33. You know, I
Yep.
was back there for 10 days, Dana. I didn't think about it. I would have gotten a hold of you.
Yeah,
I
on
hadn't.
Sunday, you ran the marathon on Sunday?
No, are you kidding me?
Oh, okay.
I ran the marathon on the couch watching the Bears win 2 weekends in a row.
Oh, you got up
So
early for that one
yeah,
in
and
London.
yeah, um, and 2 weeks in a row when I was there. It was great to be back.
Yeah,
And you know, I relate to that song by Fogelberg, Illinois. Ever hear it?
probably. I'm not a big
All right,
Fogelberg guy, but
all right. Well, I
I'll
wanted
I'll I'll look it up.
that's an assignment. All right,
Okay, I'll look it up.
and Dana, thanks so much. Dana, on top of things, I don't. I think everyone should diversify away from themselves. Okay, and that's when you look for guys like Dana, especially if you're a trader like me and you think you're just going to make it all, with your short term trading. That was a mistake I made. have a long-term plan. Don't expect it all to come out of, you know, swing trading, because you're going to have down years too. And, you know, you also have to apply the wealth management part of your life besides where do I get in, where's my stop, and what's my target. Okay. Um, Check Dana out, and thanks, Dana, for it's good to talk to you. I'll talk to you in our new world in probably January.
Yes, sir. Yeah.
You think we'll have a decision on the presidency by
Yeah, maybe
inauguration day?
the hanging chads again, right?
Oh yeah.
Who
All right.
knows?
Well, always great hanging with you, Dana.
Yeah, always a pleasure, Dale. Thanks for having me on.
All right, buddy.
All
Dana
right, take care.
Lyons, everyone. Check him out on X at J Lyons Management, and you know, give him a piece of your retirement capital to manage. He'll probably do better than you. All right, everyone. You could join the team in 15 minutes on the Morning Edge. And don't just count your pips, count your blessings. See everyone tomorrow. People are thanking you, Dana. And that's a wrap for me. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.